Right. We are discussing continuations of the last week tute, and then I will give you another tute on to cover today, the rest of the part, and the next Sunday. Right. Let me now we where we have stopped last time, the price, right? Now, why we discuss why price? I just to sum up or recap what we have learned last Sunday, right? So, what is price? Now we discuss a price is basically amount of money customers have to pay for obtain a particular product or services. Now, you know the price can come from many forms, right? It can be a form of fees, commission, fares, rent, salary, subscription, donation, wages, whatever you call it. As far as the banks are concerned, price is an interest income, right? Price is interest and commission and other fees. Okay. So then we moving to discuss why pricing is unique compared with other marketing mix element. What we have discussed, we discussed price is the only element that generate revenue to the organization, that give profit to the organization. All other marketing mix are expenses, but pricing is unique. Why? The generate profits to the organization. Second one we discussed, and you can make use of pricing as a competitive weapon. Now, to beat the competitor or combat competition, you can use pricing. You offer a higher interest rate for deposit. You are giving low interest rate for loan for certain customers. Thereby, you can capture certain competitors, customers to you as well, right? So, therefore, pricing can be used as a competitive weapon. Second, third, you can say, you know, price can be you can be used as a communicator. Sometimes you see some banks put only the interest rate high percent, 6%, 5%. Now pony we are giving 7%. Like that, you can make use of your interest rate for communication purposes. So therefore, pricing can be used as a communicator. Three things. Fourth one, you know, when we come to the pricing, we discuss there are so many factors we need to going to take into account. Now we are going to discuss later on that. So many variables involving, right? So many variables involved, as well as so many people are involved. One from marketing, one from finance, one from asset, treasury. A lot of departments are involving in banking, pricing, policy. So we usually have a committee called Asset and Liability Committee. We call previously ALCO. ALCO, right? Those are the committee usually looking after the pricing element, right? The liability issues and the liquidity issues, all matters will issue take into account by the ALCO. So therefore, many variables and many people are involved in setting pricing. Then the next one is, as I explained to you, it is a conversion point. What do you mean by a conversion point? Where the buyers and sellers are meeting, right? Right. Okay. Other factor is, now price is usually, you know, is an associated with quality. Price is usually associated with quality. Now, these are some of the unique features what we have discussed last time, last Sunday about this. Okay, from that point, now we are moving to another important area where pricing depend on following factors. When you're going to decide the pricing for your product, pricing for your credit product or deposit product or whatever things, you need to take into account some factors. So let us explain what are those factors. Now, first we need to look at it, any product, what is the cost I am going to incur, right? What is the cost we are going to incur? Now we discuss product life cycle. Can you remember product life cycle? We discuss the development stage is a costly thing. right? At the development stage is very costly. So therefore, you have to incur a lot of cost. Then you have to incur cost for marketing for carried out advertising, right? Uh, you know, create awareness. We saw at the introduction stage, we have to spend a lot of money. Different stages of the product life cycle, we have to have a different strategies, so, right? So therefore, usually at the beginning, we have to spend more money. So we need to look at those costs, right? Promotional cost. And then we may have to give, now say sometimes we have to give commissions for people, sales commissions, right? So for banking products, also sometimes we have to give cost, sales commission, right? Okay, so that's also we need to take into account. Then there may be administrative and ongoing services costs like your salaries, your vehicle, your whatever, relief materials or whatever, those are the costs. So you add all the cost to your product, right? Cost. Then you may have to look at it. The next point is what is the profit you're going to expect from marketing of or selling of this product, right? Okay, let's look at what are the factors you need to take into account. Now, what is the profit you wish to make? Now, for a normal product, what is the markup you're going to put? 10%, 2%, 3%, like that. So 20%, like that. You have to think, what is the profit I'm going to earn from this, right? පාඩුවට විකුණන්න අපි කියන්නේ ටිකක් හරි ලාභයක් තියෙන්න මොකද්ද ලාභය, right? ලොකු ලාභයක් තියා ගන්නවද පොඩි ලාභයක් තියා ගන්න. So you need to take your decision, right? Then you need to, not only that, you need to look at your competitor prices. That means now banks, you can't just put the prices, because you have to look at other banks, what is the pricing for their offering, right? So we need to look at it, that also competitor price. And also we need to look at it, okay, what is the customer's willingness to pay? Can you remember marketing, we discuss demand, right? Even though some product customers, if you're a good product, and he may pay more, right? So you need to look at what is the customer's affordability and willingness to pay. As well as you need to look at it, your bank considerations. Now, what do you mean by the bank consideration? So that is your marketing objective. What are you going to expect? You are going to for capture the market. So you have to go sometimes below the market. Now that pricing sometimes we call penetration pricing strategy. Now say for example, what do you mean by a penetration pricing strategy? Penetration pricing strategy, PENETRATION. Penetration strategy. Now I'll tell you a good example. Now you take the mobile phone. You take the mobile phones for an example, right? Now some of you may be not bored sometimes, right? So you may heard about this. So you can learn from your parents or your brothers or sisters. At the beginning, when the mobile phone introduced to the market, right? When the mobile phone introduced to the market, mobile is very big, right? They charge around 150 rupees per for phone and a connection. Imagine 150 rupees 20 years ago is a huge cost, right? So why we can charge 150 rupees? Because there's no any competitor in the market. So therefore you can charge for that type of product. We call skimming pricing. What do you call? Skimming. Skimming means SKIMMING. Skimming pricing. If there is no people in the market, only you are provided, you can charge. Right? That is skimming prices. Now, take the same example. Now, can you charge 150,000, 50,000 rupees now. Earlier, 150,000 now is worth around maybe one close to 1 million, maybe 5 lakhs, 3 lakhs. Are you willing to pay, get the connection, phone connection for that amount? No, no. So now if anybody want to come into the Sri Lankan mobile market, what happened? They have to go for penetration pricing, low price. It will go to everybody. That is the company considerations of bankers. You know what you mean by a penetration strategy and what you mean by a skimming pricing strategy. Okay, understood. Right. Not only that, but you need to look at it, the regulatory factors. Now, for banks, we have to take into account. Now, can we charge any interest rate for Pony? Can we charge any interest rate for credit card? No. So there's a regulatory, the central bank has given us the direction. This is the maximum you can charge. So therefore, sometimes the pricing depend on the regulatory as well, factors as well. So these are some of the point, and also sometimes you can add something depend on the channel of distribution. What channel you are going to have it, right? If your product is going to sell it through branches, is costly. Online, less costly, like that, right? Okay, now these are the factors you need to take into account before you setting that pricing. Clear? Right? Those are the factors you have to take into account before you set your pricing. Right? Okay, I think you understood, right? Okay. Understood? Clear? Okay, Chatuvini, you understood? Ravi? From Pranav, Pranmad, no? Right. Okay, so you understood that, I heard. Manti, okay. And then okay, right. I like to see you, okay. Okay, I like to hear your voices, right, in the morning. Okay. Pranava, no, Iswaran, right. I'll put it, Iswaran is very easy to mention, Iswaran. Okay. Right, now we may now moving to the next point, right? So that is what you call there's something. Right, now let me explain some of these. Right, let me explain now type of pricing methods used in financial services. Now, mind you, so far no question asked on this, but you must sometime they may ask, right? Pricing methods. Right, first one method we call, just listening to me very carefully, is very easy to understand. Type of pricing used in financial services, this first one we call tiered pricing, right? Tiered pricing, right? Now here, say for an example, now you want to take a charge, you want to take a loan of 350,000. Now you know when you're going to take a loan, usually you have to give a certain guarantee or maybe collateral. Now suppose you don't have enough one particular guarantee, but still you want to get a 350,000 loan. Now for that you can have things like that. Now up to 100,000, bank can ask for customers insurance life policy. So they will give you a different interest rate for that, right? Up to 100,000. Say all 100,000, say we say for 10%, for an example, so 10,000. So from up to 200,000, right? If you can go, right? Or otherwise, from 100 to 200,000, you can go for market value of certain company shares you can use as a guarantee. But over 200 up to 350,000, if you have a somebody, if you put is a personal guarantee, there's a different rate. Basically, what is tiered pricing telling? So you can take, right, you can keep different type of guarantees, different type of collaterals, but for that, amounts of interest may change. So that is what you call tiered pricing, very simply. Based on your collateral, the interest charges are different, right? So that is what you call tiered pricing. I hope you understood, okay? Right, next one. So this one we call bundle pricing. So what do you mean by a bundle pricing? Now, it is very famous in supermarket for consumer items. අර දෙකක් බැදලා තියෙන්නේ toothpaste එකයි toothpaste එකයි toothbrush එකයි. So if you are taking both, you have a low pricing, right? Now, bundle pricing as far as the financial products are concerned, suppose you are having insurance cover for your for your accident or whatever, but you can get covered to the same insurance with the life if you give some additional premium. So that is a comprehensive cover or something people are calling, right? Presently you are having only the cover for some accident or whatever. You can have other death or whatever into your insurance cover. So that is we call bundle pricing. Clear? Now you understood what is bundle pricing. Then third method we call two-part pricing. What do you mean by two-part pricing? Now, this is very famous, so easy for credit card. Now, you noted two-part pricing. There is a fixed fee for certain amount and plus interest. So you have to pay interest, and credit card have two parts, right? Interest and a fixed fee. Now, can you tell me in a house, we also have a two-part pricing. We can have two utility bills have the two-part pricing. Can anybody tell me what are the two utility payments which you having a two-part pricing? There's a fixed part and the consumption. Now you look at the water bill or electricity bill, you noted that there's a fixed amount every month, some fixed amount. What is the other part? The other part, the amount you consume. So that is two-part pricing. Banks also have a similar product. That is two-part pricing, right? Okay. Another method we call is here, 1, 2, 3, 4th method is we can say tailored pricing. Now, what do you mean by a tailored pricing? Very easy. Depend on the relationship with customers we are having. Now, we may give different interest rates. For when you're granting a loan, we have a different interest, and if you deposit or large deposit, we have a different pricing methods, right? So that method is called tailored pricing. That's the fifth one. Then the sixth one we call captive pricing. What do you mean by a captive pricing? It's simple as this. Captive means suppose you are going to get a water leasing or whatever from an organization like a bank or finance company. Now, if you get the insurance cover with their own insurance agent, or sometimes they also have the insurance, bank or insurance, right? So you have it's a captive pricing. So you have lease facility sought to purchase a motor vehicle, and it is compulsory that you take vehicle insurance cover from the leasing company. right? That is captive pricing. Okay, if you are going to get a house, say for an example, even for a housing loan or motor vehicle or whatever, you need to get the insurance cover from that organization as well. So that is captive pricing, tailored pricing, captive pricing, bundle pricing. Now you know. Then you know the time pricing also. And these are very simple things. What are the time pricing? So we are very famous. Why? So we have a 3 months, we have a savings, we have a 3 months, 6 months, 1 year, 2 year, 3 year, 5 year deposits. So based on the different time period, so your interest are varies. Okay, so therefore different interests for different time period. Example, fixed deposits. So we have a time price. Right. Next one, pricing of options. What do you mean by a pricing of option? Now, suppose you deposit the money for 1 year. Example, right? 1 year. You want to withdraw the money within 2 months or 3 months. So you agreed for 10 months. But if you're going to take the money from 2 months, sometimes you may not get any interest, but you usually get lower saving interest. So that is pricing of option. Or sometimes you are requested certain banks, you need to maintain minimum balance of so much. So if you are not have the minimum balance, so they will charge you. So these are pricing of options. Or sometimes you go for what you call variable, what you call the fixed fluctuations interest rate. Right? Some variable interest rates you are going. Based on it is linked to the prevailing market rate or trading rate of LIBOR plus. So, you must be knowing all these things, right? Okay. To fix to treasury bill rate or repo rate or whatever. So that is pricing of options. Okay. Right. Then you have a product range pricing also. Now, say for another example for that, if you go for mortgage loan and a personal loan, right? Usually the mortgage loan mean you keep some property or assets as a guarantor. But if you go for personal, you have a different interest rate. So this is not a slab, right? It is not a earlier what you call tiered, but this is a totally. So if you can take the personal loan, keep in your house or keeping whatever. That is mortgage loan. Personal loans, put somebody guarantee and you take the loan. So for that, usually the personal loan is higher than the mortgage loan. These are we call product range pricing. Right? And then you have another pricing methods. We call them as transaction pricing. Now, good example. Now, there are sometimes the bank say if you deposit money, if you withdraw for more than 4 times per month from your savings account, so we have a different interest rate. Or as simple as that, commission charge for ATM cash withdrawal. Even you withdraw 100 rupees, even you withdraw 200 rupees, even you withdraw 300 rupees at any given time, the charge is same. But the more you use, your commission also change. So these are we call transaction pricing. Right? Now I think you understood pricing. Clear? Okay? Right? So I'll just briefly go through again right? I may go through again. Right. Now, what we discussed from last 25 minutes about pricing. One of the key element in the marketing mix, right? One of the key element in the marketing mix. What we know about the pricing? We discuss pricing, why is unique. Then we discuss what are the factors you need to look at it before you setting the pricing for particular financial product. Okay, then we discuss what are the type of pricing methods. So market penetration pricing and skimming pricing we discussed. That's also strategies, right? So methods for financial product we discussed earlier. What are the methods? I think easily tiered method, or then we discussed bundle pricing, two-part pricing, tailored pricing, captive pricing, time pricing, pricing of options, product range pricing, and transaction pricing, right? So for that is more than enough for your exam. There are so many things on that, but your level, that is more than enough for your pricing. Pricing is one of the important elements. Okay, understood, right? Clear? I need a feedback, Puta. තේරුණා නම් ඔව් කියලා නිකන් මැසේජ් එකක් කරේ ඒවන් කවුරු හරි කෙනෙක්ව මම this a random sample. හරිද? Clearද?
Yes, sir.
Questions? Okay.
Sir.
Clear? Right. Okay. Right. Now, then we moving to another important element in the marketing mix. That is what you call the. Now we discuss at the moment how the right products are produced, right? Under that we discuss what is a product, what is product life cycle, what are the features of the product, and then we discuss what are the levels of product. Can you remember? New product development, product life cycle, BCG matrix, all things we discuss. Why we all discuss? We want to develop a product which is appeal to my customers. Okay, and then after that we discuss how to set the good pricing for my product. How to set the good pricing for my product. Clear? Right. But marketing is not finished. Why? You have a right product, you have a right price, but still you need to have a product available to the customers. So that's the word, the another P comes is what you call the place element in the marketing mix. You must have the product available to the customers. Right now we are going to discuss that is called channel or delivery channels. Earlier we had only one channel, that is branches, but now we have a different channels. Now let me explain. Now this is very important, and mind you, this is helpful your commercial banking, sometimes survey also help this topic, right? Some of the things what we are learning, you can get it support to answer for your commercial banking as well. Okay, now let me explain what are the channel functions. Why we have branches, why we have ATM machines, why we have a CDM machines, what are the functions of a channel, okay, from the marketing point of view. Various functions of channels, right? Now think about your branch, for example. So what they do? So you put banners, you put in your electronic gadgets located in your branches. They show some advertisement. Even your ATM machines show advertisement. So therefore, channel provide a promotional function to your organization. First one. Second one, it is a contact point. Like pricing, channel is the place where you meet. So you find solution to the customers. When you come to the branch for advice to buy a product or open an account or get a loan, you explain to them. So channels provide a contacts. Contacts. And not only contacts, channels matching the customer's requirement to sort out their problem. Provide solution to the customer's problem. And also, remember, you get a lot of information that good for your head office to take quality decisions. The customers talk about other competitors' informations to you. They give you insights. So that information you need to collect, and certain valuable information you will communicate it to the head office. Some people are saying, okay, say pony is at 7%. Oh, then somebody can say that bank gives 6%. No. Not only that, they give the gifts also. Why want to pawn articles with your bank? So that's the information, valuable information you are collecting. Right? So therefore, channel provide these functions. What are the functions? Promotional function, contact function, matching function, and information functions. Clear now? Right. Now the important area we are going to discuss about what? Right? Delivery channels. If you have a good delivery channel, you can improve your bank market share. Right? Okay. Now let's look at it very simply. And this is very important, as I told you, for your commercial banking, sometimes survey as well. Right? What are the delivery channels? So you know, in today's context, in banking delivery channels or financial delivery channels, now you can divide it to two. What are the type of delivery channels? One is a traditional delivery channel. What are the traditional delivery channels? One is our brick and mortar, that is our branches. Now remember, ATMs one time be a modern channel, but today we can see ATM can be considered as a traditional channel. And sometimes mobile vehicles, not mobile phones, mobile banking, mobile vehicles. We use mobile vehicle, that also some sort of a traditional channel. Earlier, a lot of banks, especially the National Service Bank, tried to collect a lot of money using their mobiles van. Still, you are using. So what are the model channels, new channels? We call post terminals, online banking, web, telebanking, mobile banking, using apps, tabs, smartphones, and agent banking. Agent banking. Right? Now, and also you can add to this one as kiosk, K-I-O-S-K. I will give you a small note about the kiosk, K-I-O-S-K. It's sort of a internet base, right? It's not a kiosk also. Some sort of online banking method, right? We call K-I-O-S, kiosk, K-I-O-S-K. Sometimes we call kiosk as pay and go machines. What is that? Pay and go machines. Kiosk mean pay and go machines. ලියාගත්තද? හරිද? Kiosk කියන්නේ සමහරවිට අපි කියනවා pay and go machines. Pay and go machines. Right. Okay. Can you write down something about? Okay, can I come back again? Okay, first we'll discuss this method, right? Okay, do you know the branch is a traditional channel, right? And but it's highly costly, right? And then that's the old methods you use it. Now, when customers are considering the channel, what maybe customers are look at it. When customer want to select a particular channel, what are the factors he may look at it? With traditional and modern both. One method is they are using convenience. They look at it convenience. Convenience in terms of the place. Now, place mean whether you have a parking facility, whether you have a strategic location. Now, that is why I'll tell you an example. Now, one of the strategy used by Keel Super against the Kargis, what is the strategy used by the Keel Super? They use more than their shop, they have a huge car park. Now, Kargis not look at it. Kargis not look at it car park. Now only they have realized the importance. Now they may go for little car park facility. But here's the prime factor is the car park. So banks also, customers are look at it, the parking, as well as the strategic location, right? The good place. And also other digital delivery factors like self-banking, use of robotics, then ATM, CDM machines, AI facilities. I will discuss all this later on, right? So customers look at it 2 points. One is the convenience, other one is the digital delivery. So today we are going for a 50-50. We need people as well as we need robots or machines. So digital delivery at convenience place. Customers may look at it before they selecting the channel. These are the available methods for customers, right? Okay. Now let's look at it. We were going to discuss all these things, right, in one by one, but commonly we are going to discuss what are the advantages and disadvantages of modern delivery channels and how protect the customers of using these channels, right? What is that? What is the advantages and disadvantages of modern delivery channels? But we've discussed about these POS terminals, online banking, telebanking, mobile banking, agent banking, and all these things. Those are we call modern delivery channels. So what are the advantages and disadvantages of this? Okay, you can put 3 points up 3 columns here. And first you look at it. What are the advantages? What are the advantages of modern delivery channel? One, what? Cost is less. Your transaction cost is less. That's the number one. Less cost. First advantage. What is the second advantage? Cost less. Then you can have a 24/7 365 service. You know what you mean by it, 24/7 365. Whatever will occur, you can obtain the services. But branch you cannot, it's closed, but certain new delivery channel, you can do a lot of banking at any time, anywhere. Second. Third, Now, sometimes certain activities you can automate it, or sometimes it can be outsourced. It's cheaper to do outsource. Okay, you can say can outsource or the automated services. Example, call center. And also you can say call center. So you can outsource as well as automated service. Right? And certain facilities can give free of charge. Some services customers can get free of charge. Now say fund transfer, fund statement, statements. You can view your account balances. So certain facilities you can take free of charge. Right? That's another advantage. And another important thing is while you are moving, you can do banking business. How? You have a mobile phone. You may apply your transfer the money or fund transfers. You can, while moving, while you're doing other work also, you can do. Now we say while moving, banking can be done. Another advantage. And you have a real-time transaction process. Real-time transaction process. If you want to send the money to another person's account at the same time, you can use the SEFT method. We are going to discuss all these things later on under type of customers, right? SEFT methods. Real-time transaction process. Example, SES. Then time saving. You use your time, valuable time, and you have access to finance also. Access to finance. Now I'll give you around 9 to 10 points as far as these are common to all modern delivery channels advantages. Let me explain again, just briefly tell. Less cost, 24/7 365 service, outsource certain activities, certain facility you can give free of charge. You while moving, you can do the businesses, banking. Then there is a real-time transaction process, time saving, as well as access to finance. Right? These are advantages. Then what are the disadvantages or limitation? Limitation, some feel complex. Once you get used to that, is okay, but you will first. You were right. Transfer account. Now we have a lot of development for that, but still, first feel more complex. That's the first disadvantage. As you know, is a very famous one: hacking, cyber security issues. Hacking and cyber security issues. For banks, is a high level of investment. High level of investment to the bank. And there are also issues, the banking secrecy or the confidentiality of information, also some issues. And also operational or reputational risk. Suppose your internet or your ATM is always break down, so you have a reputation and operational issues. There are system failures and all. right? So these are some of the limitations or the disadvantages of modern delivery. What are those? Feel more complex. Feel more complex. There is a cyber security issues, hacking, things like that, phishing, cyber security issues. High investment for banks. The bank, because one ATM machine or CDM machine is costly around 1 million, close to about 1 million, and the maintenance cost, right? All things. And fourth one, the sick confidentiality issues. Other one, the reputational issues or operational issues. These are how this. Okay. Having understood the advantages is more than the disadvantages. So banks try to promote this new modern delivery channel. Now, in this sense, how can you educate customers? How can you protect them of being less danger by using modern delivery channel? And that first one, educate customers. Educate customers about internet banking and other things. What is that? Educate customers. Next one, right? Implement logical control. Implement logical control. What do you mean by to how to use the password and how to strengthen the password? uh, uh, PCS and word confirmation. Sometimes they call you if you go abroad and do some transaction. These people will call somebody from here to see whether it's an actual transaction. If certain amount is more than what you normally do, you get some this. And you may get some SMS delivery facility, SMS facilities, right? You get the obtaining the SMS facility. So now you get the message. As well as build, next point, build firewall to secure system. That is the bank's job. Ensure that your system is have a firewall to secure system. So nobody can easily get into the system. That's the bank's job. And you can conduct penetration tests regularly. Penetration test, that you need to do a testing whether something is are using. And sometimes there's a new method called legal ethical hacking. Sometimes one person is trying to hack the system to see whether what ways a person can hack, and that is your bank is doing, and try to avoid something happen like that. And also you must have a how to protect them. You must have a disaster recovery plan and BCP plans. Disaster recovery and BCP plan. What is BCP mean? Business continuity plan. Now, from having all these things, you can protect customers who are using modern delivery channels. Let me explain again. I'll explain to you what are the advantages, what are the limitations or disadvantages. Since the advantages is more than the disadvantages, so when your people who are using the model delivery channels need to be protected. For that, what actions can we do? Educate the customers how to use their internet banking and to how to use their password. Then implement a logical control. Second, word confirmations, complex passwords and things like that. And the third one, build firewall to secure system. Conduct penetration test regularly. That is why I use ethics, legal ethics. That means the one guy who's hack official, see whether to protect the customers. Next one, having something happened, so you must have a DRP, that is disaster recovery plan or business continuity plan. Business continuity plan mean if your organization happened, something happened to your organization, how often your organization can bring to normal operation. That is the BCP plan. Now, classic example, during the corona, banks, to what extent the banks are used your BCP plan. All bank closed, what to do? So what are the BCP plan? So banks initiate lot of mobile vans, So what activities they initiated, right? I hope you understood. Clear, Daika? Right? Okay. Right? Any questions, Puta? Clear? Understood? Harida? Clear? Kalinga?
Yes, sir.
Right. Okay. So now we move into discuss the some of these new modern delivery channels, right? So it is in your handout. I just briefly explain the certain things. Telebanking, right? Telebanking, you're using telebanks, the telephone to deal with customers, to transfer account, check your account balance, and things saying that, right? That's lot of banks are providing this telebanking. It's not a mobile banking, right? It is called telebanking. Then you may have an internet banking, that is online banking. You're using as an electronic payment system, and that's enabling a bank to conduct range of financial transaction through the websites or bank mobile app, right? Okay. So, and then what are the facilities you can get it from this? As you know, check account, check balances, transfer funds, pay your utility bills, pay your loans, sometimes submitting online applications, opening accounts, obtain a credit cards, or without going to the bank, transfer the money right to one account to one account. So that is internet banking. So what are the benefits of internet banking? As I some of the things as what we have learned earlier as a modern banking, but specific to the internet banking, easy access, right? And then can do their banking at any time, convenient to them. You don't want bank staff, so you can serve a lot of cost, and also fast and efficient, right? And then you can have a virtual banking also without having people. So these are some of the benefits of internet banking, and internet banking also can be considered as a new modern delivery channel, right? Okay, that's for your understanding again. Then what do you mean by a point of sales material, right? Point of sale material, that is terminal. Point of sale POS terminals are introduced in Sri Lanka in 1994. Use your mobile gadget to do some transaction. Palm top banking, people come to you and collect the money. Banks are using, do some transaction, and so this is another method, right? Now you need to write something as I explained to you before I move into that. I told you to write a small note, 1 or 2, 3 para is a we call kiosk, right? Kiosk means payment and go machines. You can write down few points under that. First point, uh, right? You can write down this right under the kiosk. This is a small internet enable small internet enable digital small internet enable digital and user friendly booth. User friendly booth installed in supermarkets and other convenient locations. So you can do a limited transaction. What do you mean by a kiosk or pay and go machines? That means small internet enable digital and user friendly booth installing supermarkets and other convenient places to obtain limited financial services. That is called kiosk or pay and go machine. Small, I repeat it again, small internet enable digital and user friendly booth BOOTH installed in a supermarket or any other strategic convenient location to obtain people to avail certain financial services. What are the services? Utility bill payments, right? It facilitate financial access, promote financial inclusion, and also reduce operating cost. Suppose if you have a branch costly, this is less operation cost. These are some of the features of kiosk. Kiosk, small, internet, enable, digital, and user-friendly booth. Booth taken located in supermarkets or any other convenient places for customers to take some limited transaction services, financial services. Okay. So what are the advantages and benefits? Clear? Right. Now we moving, having understood that, and this is another novel thing. We call agent banking. We call agent banking because there may be a question can ask from agent banking. What is agent banking? Agent banking is where limited banking services are provided through agents appointed by banks under a valid agency agreement, right? Under valid agency agreement. Now, good example, Sampath is had it, National Savings Bank also had it with Mobitel outlets, right? But those are not much successful, but you can make use of agents. Post office also now considered as an agent for a National Savings Bank. Anybody can use post office as an agent. Where is limited banking services are provided through agents appointed by the banks under a valid agreement. Now, what are the type of limited banking services? Now, you can underline limited banking services. Then somebody can ask, What are these limited banking services? These are the limited banking services. One, deposit acceptance and withdrawal. It's limit amount, right? Deposit acceptance and withdrawal. Those are limited banking services. Second, receiving of loan repayments or credit card payments. Those are limited transactions, banking services. Receiving of loan payments and card payments, credit card payments. Next one, facilitating utility bill payments. Account balance request. Account balance details or request. Fund transfer. Now remember, agents can transfer funds within the same licensed bank. Now you can when we go to the bank, you can send the money for other banks also. No? But here under agent banking, only you can transfer the funds within the bank, not to another bank. When you go to the branch, you can send the money to any other banks. But in agent banking, you can do only for their own banks, transfer funds. And sometimes cash delivery services to customers. If you want, I want the money, so you can do that part as well. Agent bank. These are the limited banking services can be carried out by that agent. Clear? Right? Deposit acceptance, deposit withdrawals, receiving loan payments, receiving credit card payments, utility payment facilities, balance required, transfer money within your bank, as well as deliver cash to customers. Right, now you can write down. What are the questions? What are the advantages and disadvantages of having agent banking? Advantages and disadvantages. First advantage. Now, where banks, as I explained to you, is a bank having a branch is costly. Having an agent in rural areas, right? So therefore, you can provide services or deliver the banking services to remote or underserved customers. First advantage. Deliver the banking services to remote or underserved customers. The bank cannot go. First point, advantage. So thereby, it's great. Access to finance. Second, access to finance. From the bank point of view, what are the advantage of the bank also? Cost reduction and can improve or can increase the customer base. Right? For bank, can have increase the customer base. Less cost. For customers, what are the advantage of agent banks? And they save a lot of traveling time and the cost because it is nearby your house. And also, banks are closed, but here availability of banking services at flexible times. අඩේ කියලා වහන්නේ නැහැ මේ වෙලාවට හරියට 8ට පටන් අරන් 10 රෑ 8ට වහන්නේ නැහැ නේද? There is a flexible working hours. So you can do transaction at a flexible time. So these are some of the advantages of having agent banking. Right? Okay, now try to listen to me. Now, what is the definition of agent banking? Appoint agents under valid agency agreement. So therefore, agent bankers or agents are fully responsible to the banks. So banks is responsible to the regulator. Once you appoint an agent to do the agent banking, say one bank appoint agent for agent banking, bank need to take the full responsibility. Because bank is the person who's appoint this agent bank. So when you're appointing agent bank, remember central bank has given certain guidelines how to appoint agent bank. What are the factors you're going to look at it? Right? And before you appoint agent, you need to get a permission, so the approval from the central bank. So responsibility of the bank, therefore, is to look at it selection criteria, certain factors like how agent maintain the confidentiality, whether banks need to carry out risk evaluation method, and so many other banks' normal activity has to be carried out by the banks about these agents. And one of the main disadvantage of agents, right? And agents are not supposed to harassing customers. So these are, we are going to discuss on the customer chart as well. But one of the disadvantage of agent banking, so agents cannot be harassing customers, and they need to maintain the confidentiality. Cannot be used abuse word or what you call for debt collections. You cannot give false information to open account. Agent cannot undue influence the customers to open accounts. There are some disadvantages which agent cannot do: harassing the customers, misleading them, undue influence them, disclosing secret information. All things cannot be done by agent, right? So therefore, agent banking, you may have a lot of limited businesses, and bank who is appoint agents had to follow certain rules and regulation. And mind you, these people must be responsible. Banks are responsible about the agents. So therefore, banks need to do some internal control, risk management activities. All things banks need to carry out. But there are some advantages of appointed agents. I hope you understood agent banking. Right? Right. Now, some people are talking today branchless banking, right? What is branchless banking? I mean, branches banking mean they deliver the financial services outside the conventional bank branches and ATMs. Now, I told you it's a traditional methods using modern techniques, modern delivery channel. That is branchless banking. Using modern techniques or modern delivery channels instead of conventional delivery channels. It's called branchless banking. Simple as that, right? Then what are the advantages? Same. Advantages are, those are impersonal. That's a sometimes maybe the disadvantages. Customer harassing, confidentiality, security, fraud, lack of trust, all are limitation. All are limitation. So then what are the advantages? Reduce the cost of delivery, increase the convenience to customers at any time, improve access to finance. Now, you need to understand something. You must take into your mind, always there may be a lot of questions like this. What are the advantages of delivery channels, modern delivery channel? And what are the limitations, how to protect them? ඕවා තමයි කරකෝල එන්නේ එක එක විදියට. But agent banking එකේ පොඩ්ඩක් වෙනස්. දැක්ක නේද? Right. But it can be benefited for your commercial banking as well as clients management. One question is definitely asked commercial bank as well, and also the financial clients management about the delivery channels, the modern delivery channels, what are the features and things like that. We're going to discuss little later on other delivery channels. Right? Okay. And again, we talk about universal banking. Now, you know what is universal banking? So, where the banks offers wide variety of financial services, including traditional commercial, non-traditional investment and insurance services. So that is universal banking. Sometimes the examiner can ask, what is the difference between commercial banking and investment banking? How we differ from universal banking? Commercial banking are catering towards general public. But investment banking are maybe catering to the different set of people, corporations, governments, big investors like that. Commercial bank earn profits or earn interest income by accepting the deposits, where these the investment banks don't do. They are getting only the commissions and fees. They take the loan, take the credit, take the deposits and give loans. But universal bank may arrange merging and acquisition, arranging capital to the organization. Arranging capital to the organization. Right? These are some of the difference between commercial and investment. And how we differ from universal. Universal carry both commercial banking and investment banking. Remember that. So examiner can ask, what is the difference between commercial and universal? Commercial and investment, and how these two banks are differ with universal bank. And they provide service, both services are provided. Right? Okay. So what is the limitation in that case? Limitations, universal banks, they are involving in insurance, investment and traditional commercial banking, they may have a different regulators. But commercial banks not like that, only one regulation. So you for that you need varied expertise since you are handling all the activities, all the areas. Now is a good example. Lehman Brothers is a universal case, universal bank. So Lehman Brothers, that's responsible for world financial crisis in 2728 because they tried to do universal banking. That's what they failed. That's some people are telling, right? And and there may be sometimes the systematic risk. Why? Because of large business volume handle as well as conflict of interest. All things are some of the disadvantages of universal banking. Now you must be knowing what is commercial banking, what is universal banking, and what is investment banking. Right? I just give you an idea, right? Food for thought. Okay. So with from this, okay, write down this question. Write down small question in your exam. What is meant by omni-channel? What is meant by what is omni-channel? OMINI channel. What is omni-channel? Can anybody tell me? Huh? What is an omni-channel? Can anybody tell me what is omni-channel? Any guesses? Mohammed, Tahir, what is the omni-channel? Now those are the new things, right? Omni-channels. Right, online platform, correct, Sajini, but what is the omni-channel? If a customer, if a financial customer can shop across multiple channels, we call omni-channels, right? What is that? Any financial customer can shop across multiple channels. That means he's an omni-channel, right? Right. Good. I got a good the long definition. Yes, correct. Exactly. Right. You need to know. Now I heard I got a message. I got a letter from McKinsey. Well, I am a member of the McKinsey, and you know the latest e-commerce is what? Can anybody tell me what is the latest e-commerce today, which Alibaba has practiced, and yeah, they said it's going to be popular maybe in the future, like cryptocurrencies and all. What is the latest e-commerce type of e-commerce? We call live commerce. What is that? LIVE, live commerce. Right? Remember, what is live commerce? Alut maker. Live commerce means basically you while you're purchasing, online purchasing, or you have some entertainment with purchasing, we call live commerce. Entertainment with purchasing, right? Live commerce. So Alibaba has initiated that, and they did a trial, right? And they found that around 7.5 billion US dollars in a trial they generated sales. That means the test marketing is successful, right? They may going to launch in a big day. What is called live commerce. Right. It's not a hybrid product, but I also don't know because only now I got a message from McKinsey in the future there is something called live commerce. That is basically is entertainment plus purchasing. If you want to purchase something, there may be a some entertainment activity. I am not sure what is that exactly, right? It's a test level. Okay, having discussed that part, I think you understood everything, right? Now we are moving to the uh, today balance part, right? So that is what you call the 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 another important area. Okay, right. Okay, clear. Now I try to finish this marketing if possible. I want to finish it next week. I mean this Sunday, right? From next Sunday, I'm going to start a new section that is very important again. Type of customers, type of products, financial products they are buying. What are the risk factors and things like that? Okay, right. So we have another 40 minutes. We see whatever area we can cover under the new institute. Right? Correct. Then start with again issue. Now, earlier we discussed we have the right product and the right service. And then we decided the optimum price, a good price for that product. And also we discussed how the product and services available to customers at good places at what customers problem. Do you think marketing is still finished? No. But we have a problem. We have a good product. We have a good price for that product. It is available everywhere. But what is the problem? In order to buy this product, whatever, you must have aware about this product. So you need to talk about this product. And then the next element comes the word, the promotion. How can you communicate your product and services to customers to buy? We have a nice product, we have a better product, we have an optimum price, it is available everywhere. So then you need to communicate to them. We need to tell them to buy. So that's the next promotion element in the marketing mix is called the next P is promotion. So let me now what we are going to do now? We are going to discuss all these methods very briefly. What is digital marketing? What is direct sales force? What do you mean by an advertising? What do you mean by a direct marketing, not digital, direct marketing? What is sales promotion? What is public relation? What is publicity? What is sponsorship? What is exhibitions and fairs? And what are promotional literature? Now we are going to touch all these things. These are the methods. So some banks are use one or two methods. Some are use only few methods. Some are use the combination of these. So that is why sometimes we call is a promotional mix. A lot of things are available in the promotion basket. So which one you're going to select depend on the circumstances. That is what I told you. But mix has to be changed from time to time in response to the new factors in the marketing picture. Okay, so the method you're going to use has to be changed differently in the given situation. Now you see Now the world is undergoing a digital disruption. Now you know what is Uber? World largest travel company. They don't have any vehicle. Alibaba.com, world most valuable marketplace. They don't have any inventory. Airbnb, world largest accommodation provider. They don't have any hotel, no real estate. Facebook, most popular media owner, no content. Now you see how these companies evolve. Main leaders in the business. Now remember you, when we small, when you play outside, we will take you to the inside to study. ගිහලා පාඩම් කරා. ඔය ඇති සෙල්ලම් කළා. දැන් මං හිතන්නේ ඔයගොල්ලන්ට කියනවා කියලා අම්මලා. අපි පොඩි කාලේ නම් ඕක තමයි ඇතුළට දැම්මා. දැන් මොකද වෙලා තියෙන්නේ? එළියට දාගන්න බෑ. ඇයි? ඇතුළේ එලා ඔබනවා. Right? So see, the things happen. The things are changing now. From here to here. Right? So if you really look at the total populations, so you may have mobile phone, of course, is more than population. Internet penetrations, social media using, so very high. So therefore, bankers in this context need to use your digital platform to communicate with your customers. We need to understand all these things. So then we are moving to discuss about, in that sense, what is digital marketing. Now, simply, digital marketing or simply advertising done through the digital channels ranging from search engines to websites to email and mobile apps called digital marketing. So digital marketing, therefore, is a broad term that refers to various and different communication techniques developed to reach the customers via digital technologies, right? Using internet, website, search engine, and all to communicate with the customer is called cost-effective manner, is called digital marketing. If the examiner asks you, what is digital marketing? You need to explain this. Using digital technologies, right? Okay. So what are the platforms? We have internet marketing. We have e-marketing, mobile marketing, social media marketing. These are famous 4 platforms, DM technologies. So it is estimated globally around 1 trillion communication digital platforms available, right? It's growing fast. Let me explain now one by one. What is this internet banking all about? Right? What is this internet marketing? Right? This is not internet banking. I know it is internet marketing. So the internet is a network of computers, as you are aware, which are linked together such that the computer user may communicate with other through the computer system. That is internet marketing. So for that we have an intranet, extranet, and corporate websites and web pages. right? Intranet, you're dealing with within your own, extranet, another department, or maybe corporate websites and web pages. So you can have internet banners, video streaming, YouTube, social network, and microblogging, Twitter and all. You see how how powerful these things to communicate with customers. So that part of digital marketing comes under internet marketing platforms. Now, what we are discussing, Puta, remember what we are discussing? Reaching the customers cost-effective manner using digital technologies. So, what are these technologies? One, internet marketing. What are the things comes under internet marketing? All these things. So then, what is e-commerce? E-commerce, all buying and selling of product and services is considered or electronic systems we call e-commerce. eBay, Amazon.com. Right? Now, sometimes people today we call d-commerce. Now, I told you today we have live commerce now. Right? Email marketing is marketing technique that uses emails to send marketing message to target audiences. How many email messages are coming? How many SMS messages are coming? Telling that offers. Now, in today, new technology is using, right? Now, it is linked to your smartphone. There's a gadget outside. Now, say, I'll tell you a good example, new one. Very interesting. I have the commercial with you. If I can show you if possible on Sunday. Now, say you have a pizza house. Say for an example, pizza or maybe what you call McDonald's and all places like that. So you as young people just going finding out, just walking around, and you are about to take the lunch. There is a small gadget face front of that McDonald's, right? So once you go passing, just passing the McDonald's or that shop, there is a gadget located in outside of that McDonald's, and it is linked to your smartphone, and you get a message immediately in your phone while just passing. Today, specific offer, right? They tell you, okay, this pizza is so much, this pizza free, this pizza 1 5 1 2, and immediately you, now once you go with this, once you pass the McDonald's, you get SMS or click blinking. You chat, what is this? There's offer. Immediately, you see. And then if you are interested to, anyhow you are searching for lunch or some snack, you go there inside the room, inside the shop, inside the McDonald's. You don't want to wait till the boy to come and ask for the order. Still, then from then again, once you go sit there, there's a menu. Only thing is you want to click that menu, then the stuff will come to you. So imagine how the technology has developed. I think it's very soon it's come to Sri Lanka, right? You just pass, you get a beep. Now today we had to send across. No, that is only when you pass only. Why is a contact? No, you now the message, I am been here. This offer is at Matharan. I'll get this message. I don't want. Why? I can't go to Matara to take that one. No. Here, right? But this is instant. Once you pass that shop, you get a message to your phone. And you can take immediate decisions. See how technology is developed. Right? You communicate. That is technology marketing. Right. Then mobile marketing, I just explained to you. So a set of practices that enables organizations to communicate and engage with their audiences in an interactive, relevant manner through which a mobile device or network. I told you the modification from mobile marketing, right? There may be apps, bit of software can be downloaded for free or pay to mobile phone to have easy access to those functions. Google Maps, WhatsApp, banks apps, all are there, right, to communicate with you, right? Then the most important thing is the social media marketing. What is social media marketing? It is a form of internet marketing that utilize social network websites. I don't want to explain all these things, but you know better than me because you are a younger guy. You are in the Z generations, so you are more familiar than me. And but you can make use of social media now. A lot of banks are now use social media platforms, right, to deal with the customers' requirement. And this is a very popular and very effective method of advertising. And cheaper, larger forum. Then what is social media? It's a social media marketing you can make use of to communicate with them using certain networking websites. What? Facebook, Twitter, Google, YouTube, LinkedIn, MySpace, Instagram, blogs, whatever. So these are the social networking websites you can communicate with the customers. So I'll give you a brief introduction. So what are the advantages of digital marketing? Again, like access to like channels, fast, easy access, cost effective, measurable. You can measure the hits. How many people have seen your advertisement? Right? Focus and specific. You can send to different target groups and you get instantaneous feedback. I just little while ago I told you there's some story. Create personalized messages for your birthdays. Some people send messages to you all. Have a lunch or dinner, we'll give 25% discount because of your birthday. If you buy a gift, right, in your birthday month, they give you a 10% or 15% discount, like his Odell is doing, right? Wider geographical reach. And you have to have a brand engagement. Now, Unilever have a brand engagement, right? And also long-term exposure. So these are some of the advantage of digital marketing, right? Simple, right? Simple as that. And next what we are talking about, we are going to discuss a little bit of emerging technologies. Emerging technologies in banking, right? Now, the same tune I have given with some modification. You know, this year's question about the open banking, about the open banking. What is open banking? Open banking, I'll just explain to you very simply. Open banking means now you are dealing with banks. You have a lot of information about you with the bank. Now, open banking is doing what? I try to explain it very simply. Right? What open bank is trying to do? And that with your permission, a third party can access to your data. That is open banking. Then some people can ask, where is the secrecy? That because and you third party obtain your permission and they use a lot of program interfaces APIs. That means basically, so you have a lot of advantages of open banking, right? Open banking, third party application will be permitted to access consented customer data. Consented customer data, remember, through using their interfaces. So your information, they take it and try to provide some information. So this provide a greater convenience and choice in banking by allowing access to different banks and single electronic platform. So one platform, so he access to all the customers' information. Now this time, they ask you, what is open banking? In your exam, now further, they now can ask in 2021, this is maybe November, December exam, they will ask from you, what is open banking and what are the advantages of open banking? So then how to answer? What are the advantages? You can write somewhere in that slides, right? What are the advantages of open banking? Number one, create competition among banks. Because customers have all the customers get information about the other banks, bank X, bank Y, information, banking information, banks offers. So create competition among banks. First advantage. Create competition among banks. Second, it's increase the financial inclusion. Increase the financial inclusion. Now, what is inclusion? We will discuss financial inclusion and all. We are going to discuss later on. Very simply, inclusion means get a lot of people into the financial stream of financial activities. I will explain what is financial inclusion, but through the open banking, remember, improve financial. Second one. Third advantages of open banking, encourage financial innovations. Encourage financial innovation. A fourth advantage, better solutions to customer financial problems. Can provide better solution to financial customer problems. These are the advantages of open banking. Open banking to be initiated by central bank, right? Remember, because some regulator need to be operated, otherwise banks not allowing, right? In open banking, mean third-party application will be permitted to access consented customer data through application programming interfaces. Right? Now you know what is that. Then another important thing, the new one is called cloud computing. Right? Cloud computing. Now, if you say cloud computing, now I have to explain to you in little details on that. I think so, you must be knowing. All exist IT infrastructure and operational are hand over to someone else. Now, is an on-demand availability of data storage and using computing power. Online, you know, the cloud computing can say is an on-demand availability of data storage and computer power. Simply say. Now, computing used to describe data centers available to many users over the internet or large clouds. Now, you don't want to store your items in your computer. You can store your data in a common place. When you want on demand, you can download it. You can take this information. Sometimes some people are saying clouds are two types. One is we call enterprise cloud. That means only for single organization, or it can be available for many organizations. And that is we call public cloud. There are two types of cloud. One is enterprise cloud, other one is public cloud. What do you mean by enterprise cloud? Only one organization having storing all these things. Whereas, or some few organizations get together, you can make use of whatever this information from through the public cloud. It may be limited to a single organization or many organizations. If you say single organization, we call enterprise cloud. If you have many organizations, we call public cloud. Now, what they try to do is allowing companies to minimize upfront IT infrastructure cost. They can save a lot of money. Well, why you're going to do is somebody is doing for you. We are spending a lot of money for our storing. We store all the information in a cloud, and if you need on demand, you're going to take. Now, why these applications are run faster than when you go to physically going to take out? Very difficult and time, but this application is run faster. You don't want to have a maintenance cost. And during the peak time, you can easily using the computer power during the peak times. So these are some of the important areas banks may going to look at it. We call cloud computing, right? You can store items in the cloud, right? I think you are going to learn all these things in the survey or commercial also, but get an idea around that. Is an on-demand availability of data, storage, and computer power. That is cloud computing. You want to keep the data in a centralized place, common place, right? Okay, so that is cloud computing. Then we have the big data. Now banks are full of information. It's an asset. Now today's context, information is an asset, and we need these informations to be used in a more cost effectively to sort out a lot of problems in our decision making. So there are a lot of techniques available with us, technological techniques available to analyze your big data in our decision making. Then we have business intelligence. What is business intelligence? It is an umbrella term that includes application, infrastructure, tools, and again you're using for our decisions and performance. We have enterprise business intelligence. Software packages, technology packages are available, right? Using a lot of applications, infrastructure tools to take better business decision, right? That is business intelligence. When it comes to distributed ledger technology and the blockchain, and the most important things, distributed ledger technology and blockchains. And this is where the banks are now, the central banks also are concerning about the KYC. Now we collect KYC forms from every customer. A bank also taking, B bank also taking. Now we have around 30 banks in Sri Lanka. We collect all the informations about the customers, about the KYC. It was developed by FIU, Financial Intelligence Bureau in Sri Lanka. They said these are the KYC requirements. So same form, all banks are collecting unnecessarily. If we go to the one bank, if we have the KYC form, it is available to get it all banks. Why not? That is what you call common KYC platform. So, okay, I will explain to you on these facts, right? About what is blockchain, what is cryptocurrency, what is artificial intelligence, all things in Sunday, along with other marketing communication methods we call personal selling. What is personal selling? Why it is important? What is advertising? Why it is important? What is unethical advertising? What is sales promotion? What is public relation, publicity, sponsorships, exhibition, trade fairs, right? So we are going to discuss extended marketing mix elements, as well as research, as well as marketing planning and all. most probably I feel I can cover on these things in next Sunday, right? Okay, again, we go to the distribution ledger technology is an asset basis that can be shared across network where the participant can their own identical copy of the ledger, right? So example is KYC. So if we talk another important thing, blockchain technology, then this is the Central Bank of Sri Lanka has put an advertisement. It is an increasing demand for digitalized financial services has created an opportunity for Sri Lanka to evaluate the possibility of adapting blockchain technology for Sri Lankan banking sector. And now central bank is streamlining KYC process at financial institution. How you use it, blockchain technology, to have a common KYC form, right? Okay. So now the cryptocurrency. People are talking about digital currency. It is a digital assets and it can be used as a medium of exchange that uses the cryptography and operates in independent of a central bank. It's not a fiat money. Cryptocurrency is a digital currency. Not have a physical form and exist only in the computer. Cryptocurrency is not having the physical form. It is available in the computer. Usually is managed by computer algorithm stored in a cryptocurrency wallet. Now, you know what is the market of cryptocurrency. As at July 1st this year, the total value of this market is 1.38 trillion US dollars. This is the market as at July 1st, 2021. It can be used as a medium of exchange, like a money, measure a value and store for value. So those are the functions of money, you know. So cryptocurrencies also have for certain money functions, right? What are the risks of cryptocurrency? You know, is a price volatility. Now, one time, it has started with 0.1 equal to 1 US dollar point. Now it's go to around 60,000 because of these China not accepted, and again it comes down to around 60 now. 60,000 1 US dollar equal to cryptocurrency, so much. Huge money. Issue of risk of cryptocurrency is lack of knowledge of sources. People are not having much awareness. And also, like any other digital instrument, scams and frauds also took place. You noted in USA is around 80 million US dollars loss because of these scams and frauds. In Japan, you see, Japan lost around 540 million cryptocurrency hacks in first half of 2018. Right? we call coin hack, we famously call it some famous one. And there's another one called plus token hack, plus token scam. So those are the leading issues, hack, scams and frauds took place about the cryptocurrency, right? That's called plus token scamming took place in 2019. Those are the risks, right, faced by cryptocurrency. And what are the issues of cryptocurrency? Priced stability. How can you manage the economy? Exchange rate issues comes, tax issues, because that is what illegal activities, money laundering, all things can be happen. That is why central banks of the world are a little worried about introducing cryptocurrency as the official currency, the fiat currency. But at present, one country already declared, accepted the cryptocurrency as their fiat currency. Can anybody tell me what is that country? One country already accepted cryptocurrency. Can tell me what is the Swiss country accepted cryptocurrency as their official currency? Can anybody tell? කාටට කියන්න පුළුවන්ද ලෝකේ දැන් China also partly practicing. Can you tell me which countries world are now practicing cryptocurrency as the official currency? Very good, Imandi, you correct. El Salvador. Very good. El Salvador, right? El Salvador. Very good. I'm like students to know all these things, right? But there are some advantages. There is no physical money, there is no inflation, right? That is why some people are selecting this cryptocurrency, right? Okay, so what you need to know about the cryptocurrency? What is cryptocurrency? Right? What are the risks involving in cryptocurrency? Then what are the issues of cryptocurrency and what are the advantages of cryptocurrency? If you know what is the type of cryptocurrency, what is the total market, that's more than enough. I have told all these things. There are famous, there are what I heard around 80 odds cryptocurrencies available now. But the famous one is Bitcoins, right? Okay, so you just log in to computer and your mobile phone and see cryptocurrency, and you get a lot of information, right? So we are not going to discuss about the cryptocurrency, but what is cryptocurrency? Is a digital assets like a money. It form medium of exchange, measure of value, store of value, all functions carried out. But there is no central governments are monitoring. That's the issue. Now, sometimes there may be a push central bank to use the CDC. But in China, part of their country are practicing cryptocurrencies, right? Okay, so I'll stop today. So I will continue from artificial intelligence, and we're trying to finish next Sunday at 1 o'clock. We are meeting the balance, what is marketing mix elements, as well as marketing planning very briefly, and research. Possibly try to cover. If not, we may continue for next week. Okay, right. So see you on next Sunday, coming Sunday at 1 o'clock as our usual class. Right.